2026 is probably going to be the biggest annual increase in the CPI in decades. It's going to be bigger than anything we saw under Biden. And it's not going to stop in 2026. It's going to continue. And the Fed does not have the ability, really, to raise rates sufficient enough to rein it in. And that is extremely bullish for gold. The war is going to be paid for with debt and inflation. And that's great news for gold. I mean, it's bad news for America, but it's good news for gold. I think if the war ended tomorrow, gold would rip, right? Because then oil prices would come down somewhat. They wouldn't come down to where they started, but they'd come off. If the hostilities ended and there was peace, gold would go up maybe $300, $400, $500 like right away. So, but I do think ultimately the war is better for gold than peace.
The year 2026 is shaping up to be a historic turning point for inflation, with the Consumer Price Index, CPI, projected to see its largest annual increase in decades. This surge is expected to surpass any inflationary pressure seen in recent years, creating a relentless upward trajectory that the Federal Reserve simply cannot contain with conventional interest rate hikes. Peter Schiff, a renowned economist, global strategist, and outspoken advocate for sound money, argues that this environment is incandescently bullish for gold. He points out that while the war effort is being funded through massive debt and currency debasement rather than tax increases, the true driver for gold is the collapse of real interest rates. Data indicates that with inflation potentially hitting double digits while nominal rates remain capped by the burden of a $36 trillion national debt, real rates are plunging into deeply negative territory. Historically, periods of negative real rates have preceded the most explosive rallies in the precious metals market. Even if a sudden peace triggered a $500 relief rip, the long-term fiscal damage ensures that gold remains the ultimate hedge against a bankrupt fiat system. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I'm going to pull up the gold chart. Currently trading at $4,500, closing out the week today. This is coming off the heels of a number of red candlesticks here, but it seems to kind of be basing.
Yeah, and I think it's going to recover the ground that it lost maybe as quickly as it lost it. I think this is a real head fake move. It's liquidity driven. And also, a lot of people got caught by surprise by the Fed backing away from rate cuts. And in fact, now talking about hikes. And that caused a big sell-off in gold. But gold does not need the Fed to cut rates. What helps gold is the Fed just doing nothing. And in fact, even if the Fed were to notch rates up a bit, maybe 25 or 50 basis points, that's still bullish for gold because inflation is going to be so much higher than what the markets expected that real rates are collapsing. They're collapsing right now. We're 2026 is probably going to be the biggest annual increase in the CPI in decades. It's going to be bigger than anything we saw under Biden. And it's not going to stop in 2026. It's going to continue. And the Fed does not have the ability, really, to raise rates sufficient enough to rein it in. And that is extremely bullish for gold. I mean, look at the import-export prices for February. Annualize those out, it's about 18%. That was before the war started. That was before a 50% increase in the oil price. So inflation was already rearing its head before we started a war. The war is going to make it a lot worse because the war is going to add to the deficit spending. They're not going to pay for the war with tax increases. Treasury Secretary Scott Bessent laughed that off. He said it was ridiculous to even ask if we would raise taxes to pay for the war. The war is going to be paid for with debt and inflation. And that's great news for gold. I mean, it's bad news for America, but it's good news for gold. And gold looks like it's bottoming, about to rally. And Bitcoin is inversely correlated with gold. It's not only is it not digital gold, it's digital anti-gold. It does the opposite of gold. So if gold has bottomed and is about to have a big rally, that likely means Bitcoin is about to fall through the the floor. I think central banks have been rotating from dollars to gold, and now investors are rotating from Bitcoin to gold. Central bankers were never in Bitcoin, but I do think a lot of investors in the last couple of years piled into Bitcoin, especially once Trump was elected. And now they just want to get out. Now everybody, all the Bitcoin bulls are in, and now they need to get out. And the problem is going to be, how are they going to get out? Who's going to buy the Bitcoin that they want to sell? If there's not going to be a Bitcoin strategic reserve, if the government is not going to use taxpayer money to buy Bitcoin, then who's going to buy it? They're also, they just announced yesterday that the Fannie and Freddie are going to guarantee mortgages where the down payments are just Bitcoin. And, they're borrowing against their Bitcoin to fund the down payment. I think the primary motivation for doing something that stupid is they're trying to let people buy houses without selling Bitcoin. They're trying to keep the selling pressure off of Bitcoin by telling people, hey, you can buy a house and you don't have to sell any of your Bitcoin. You can just pledge your Bitcoin, and then you could use that as your down payment. And that, will keep some Bitcoin off the market. Now, I don't think it's going to keep enough Bitcoin off the market to prevent the crash. That's coming. Well, I think if the war ended tomorrow, gold would rip, right? Because then oil prices would come down somewhat. They wouldn't come down to where they started, but they'd come off. And now the pressure publicly would be off the Fed to hike rates, and maybe they could talk more about rate cuts. But the way the markets are trading right now, if the hostilities ended and there was peace, gold would go up maybe $300, $400, $500 like right away. But I do think ultimately the war is better for gold than peace. I think gold goes up long-term regardless. But in my mind, the longer the war continues, the higher the price of gold. And eventually gold traders are going to shake this off and stop selling gold every time the war escalates. They're going to start buying it, because war means weaker economies, bigger deficits, and higher inflation. And that's why you buy gold. That's music to the gold investors' ears. That's the whole point of owning gold. And what matters is not nominal rates, but real rates. And if inflation goes up to 10% and the Fed's still sitting at 3.5%, and you have negative 6.5% interest rates, gold loves that. And gold's going much, much higher. So, buy into the gold, buy into the mining stocks, take the gifts that the market gives you. Don't ask questions. Just take advantage of it, because it's not going to be there for long. The markets are going to turn on a dime, and people are going to be surprised by how quickly they head the other way.
The gold market is currently forming a strategic base at the $4,500 level, signaling that the recent liquidity-driven sell-off was merely a head fake. While investors were spooked by the Federal Reserve's pivot away from rate cuts toward potential hikes, the fundamental case for gold remains focused on collapsing real interest rates. With 2026 projected to deliver the largest CPI increase in decades, the Fed's inability to raise rates high enough to outpace double-digit inflation creates a deeply negative real rate environment, the historical fuel for explosive gold rallies. A significant rotation is underway as the market distinguishes between tangible assets and speculative digital proxies. Bitcoin, behaving as digital anti-gold, faces extreme downward pressure as the narrative of a government strategic reserve fades and investors pivot toward the safety of physical bullion. Even desperate measures to allow Bitcoin-backed mortgages are seen as attempts to delay inevitable selling pressure. Whether through the inflationary debt spiral of a prolonged war or a sudden peace-driven rip of $500, the trajectory for gold and mining stocks is decisively higher as the market wakes up to the reality of 18% annualized import price increases and unsustainable deficit spending. Let's get back to the interview.
Obviously, higher energy costs are a headwind for the miners, but I don't think the miners priced in the positive aspect of the big increase in the gold and silver price anyway. So I don't think the mining stocks have to give back anything because oil prices are high, because there was nothing really added to their valuations when oil prices were low. So I think, yes, higher oil prices means the profits are going to be somewhat lower than they would have been, but they're still going to be enormous. And I think the gold price is going to keep rising. And ultimately, I think the gold price is going to rise more than the oil price, even though recently it's been the reverse. I think you're going to see gold catching up. I mean, oil may rise, let's say 20% and get to $120 a barrel. At the same time, gold might make, an even bigger move. Who knows? But yeah, I mean, things started to fall apart. And some countries may have tapped into their gold reserves. But that just gave others an opportunity to buy. I'm sure there were other central banks that took advantage of that and increased their gold holdings. And remember, too, a lot of these gold mining companies, one of their big, their cost is offset by their silver. Silver is a byproduct of gold, and silver was really cheap, under 20 for a long time. And now, even though it's pulled back, it's still $70 an ounce. So the gold companies are offsetting a lot of their mining costs with their silver now.
What are the odds of a hike?
I think it's still small, maybe 25%. I forget, but yeah, they're looking at a potential hike. But you're only talking about probably 25 basis points, which is nothing. If inflation goes from 2.5% to 6 or 7%, and the Fed just moves by 25 basis points, what's that? That's going to do anything. Well, I think the overall market is very vulnerable here because the market was very expensive, and even after this 10% decline, the market is still very expensive. As interest rates go up, that makes it even more expensive. So I think there's a lot of risk underneath the market, particularly the NASDAQ has a lot of air underneath it, and it could really fall, into an air pocket. So, I mean, obviously the Trump administration is going to be very cognizant of the level of the market. And that may be the breaking point for Trump. He was bragging about how the Dow was at 50,000 and now we're barely above 45,000. Once we get down to 44,000, that's where it was when he was sworn in. So we drop another 1,000 points and now the Dow is going to go negative since Trump became president. And, one of my favorite lies that Trump tells, only because it's so ridiculous and he keeps repeating it. Trump says that everybody told him, sir, we'll never get to 50,000. No, that's impossible. That's way too high. I mean, we can't do it in just 4 years. You can't do it, sir. It'd be impossible. And he goes, yet I did it in 1 year. Yeah, but the move from 44,000 to 50,000 is 13%. Nobody would have told Trump that it was impossible for the Dow to rise by 13% over a 4-year period. People would be very disappointed if they only got 3% a year out of the Dow. So nobody told Trump that was impossible. He just made that up. When the Dow goes back down and it's lower than it was when he took office, that's going to be a problem when you've kind of laid it all on the stock market and said the stock market is the barometer of my presidency and a measure of my success. I mean, the stock market is already weaker under Trump than it was under Biden. In fact, everything is weaker under Trump than it was under Biden. GDP grew last year at 2.2%. Biden's worst year was 2.5%. During 2025, Trump economy added 150,000 jobs, something like that. Half of them in healthcare. Biden added over 2 million during his final year, 2024. So, there's no numbers where you can show that the economy is better now than it was under Biden. In fact, all the numbers show that it's worse. Yet, according to Trump, when Biden was president, we had the worst economy in the history of the world. But now we have the greatest economy in the history of the world. So even though the greatest economy is worse than the worst economy.
The global economy is entering a volatile phase where political rhetoric can no longer mask deteriorating fundamental data. While the current administration brags of historical success, the objective numbers reveal a stark reality. GDP growth is flagging, job creation has stalled, and the stock market is rapidly losing its post-election Trump bump gains. As the Dow risks falling below its inauguration levels, the narrative of the greatest economy in history is being exposed as an illusion built on debt and deficit spending. The Federal Reserve remains essentially powerless. A token 25 basis point hike is meaningless against a CPI surge that is already moving toward double digits. For investors, the path forward is clear. Gold mining companies are currently entering a period of enormous profitability, as surging silver byproduct prices at $70 an ounce are effectively offsetting higher energy costs. While the Nasdaq sits over a dangerous air pocket of overvaluation, precious metals are reclaiming their role as the ultimate barometer of fiscal truth. We are moving toward a period where the return of your capital becomes far more critical than a return on your capital. As the paper-based equity bubble continues to deflate, only those positioned in physical hard assets will be protected from the systemic fallout of the coming monetary reset. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by liking this video and subscribing to our channel for more financial insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching.